What's up guys, this is Sean and welcome to another episode of the iherng podcast, and this video is in conjunction with the latest announcement of the moratorium, right? Moratorium, it's when your installment payments for your car, your house will be paused for 6 months time, right? So the moratorium is designed in order to help people with cash flow, because on the usual arrangement people will have money in, money out, right? Money in, money out. But when now during this lockdown, unfortunately the in is stuck, right? But the out still keeps going because it's for the bank ma. And a major part of the cash flow that's going out, right, mainly consists of two things: your hire purchase loan and your housing loan, right? Easily is around 50 to 60%. So if the government wants to help the people to just ease off their cash flow a little bit, moratorium seems to be a very brilliant way, and this is our second time going through this. What's different between this moratorium and the previous moratorium is how it's activated. Last time everybody gets it unless you don't want, right? If you don't want the moratorium, you need to write in and tell the bank, I want to continue paying. Good for you. It means that everything is fine on your side. You don't need all those extra things. Very good, right? But on this current moratorium, Moratorium 2.0, we will need to apply for it. I think the forms are all available already, but I think the bank will only receive applications on 7th July. Also, the Finance Minister has announced that there won't be any compounding interest and your secrets will not be affected. And these two were the main concerns of everybody in the market. If you look into the social media, right, everybody keeps complaining about this only. So like, how can bank make money lah out of this emergency lah? Unfortunately, it's still a business for banks. So what it means is, if you apply for it today, for 6 months time, you are not required to pay for your installments, but the interest will still be charged, just that they are not compound. For example, if you are paying for an installment maybe 2,000 bucks, right? Maybe 400 goes to principal only, the 1,006 is actually interest. So all this interest will be lumped up in 6 months time, and that will be like maybe 9,006 after 6 months time, right? And this 9,006 will be added into your amount to be installed in the future. And what will happen is, you are given an option. You want to settle one lump sum, can. You want to increase monthly payment after that, also can. Or there's some viral post about how Maybank does the hire purchase one, where you can take this 6 months but your loan tenure actually increased by 2 years, which is insane. But I think there's a difference between hire purchase and housing loan, because the way they calculate interest are different, right? Housing loan is calculated on a daily basis. So I put it in a very simple calculation for my own understanding lah. After I consulted a few experts, the extra payment on your installment is going to be around 70 bucks every month for every 100,000. So if your loan amount is 500,000, the loan amount will be extra 300 over bucks. But for detailed calculation, do consult your mortgage person, right? They will tabulate everything for you. I think online there's a lot of experts doing that already. But I guess the more important things to talk about today, right, it's regarding whether to take it or not. Like, who should take this? Definitely those who are facing difficulties in their business, where your income is restricted and you have no savings, right? Your saving can only sustain you for another 3 months, that's it, right? Then later you need to put a white flag out already, so that's not good. You should definitely do it. Yes, there will be interest, but what's your option, right? So by taking this moratorium, at least you have these 6 months of installments saved. For example, let's say your car loan plus your housing loan is around 3,000, it's going to be 18,000 extra. That can actually just extend your lifeline a little bit more, for you to sustain a little bit more until the MCO is lifted again. I always believe that survivability is first, number one in your priority. Survive to fight another day. Although there'll be interest later, but you're having difficulty making ends meet, right? Just take it first. Just ignore the naysayers like, hey, interest lah, hey, you're going to pay so much to the bank. I think it's a facility to help ease the cash flow, as per what we mentioned just now. And for those who have sufficient amount of savings, right, every month my income has not affected. In fact, I'm more busier than ever. I'm making more money. Then by all means, don't take it. If you don't take it, then there won't be extra interest and things like that. Then that's very good. For me personally, as an investor, I will take it, right? To me, these 6 months of moratorium is just like the previous one, right? and it seems to be like a fundraising activity. Imagine this 6 months time, right? Rentals are not going to stop. Well, it depends on whether I will want to provide a discount for the rental units or not lah. That's a whole different story. But just assume in this scenario, all this rental continues to proceed. So imagine in total, the rental collected is 5,000. Suddenly 6 months later, I got extra 30,000 in cash in my bank account. But the units are still rented out anyways, right? So let's say if I were to prolong the loan for another 6 months or 7 months, right? It doesn't really matter if I'm renting it out. Then what to do with this extra money? You can use it to clear off all your bad debts. Bad debts means credit card debts, right? Personal loan debt, even your hire purchase or whatsoever, because the interest rate is just very optimum right now. So in other words, you're taking a loan that is only 3% in interest to fully pay up a loan that is 18% in interest. So you save up that amount of interest, okay? So you can use this money to do that. Or if you're getting ready to actually invest again, but you don't have cash because it's your third property, you can no longer take up 90% loan and things like that, then this can be a good opportunity to raise fund, or it can be for your renovation. Because I paid up upfront for everything already, so until next year when I get the keys, I got no money, this can be an opportunity to somewhat raise a little bit of fund. Well, yes, there will be interest, but it's still lower than personal loan at 13%. So please do not take this moratorium as some pocket money to buy things that you like. That's the worst, right? If you suddenly I got this 30,000 or 20,000, I go and buy new furniture, oh my god, then that's the worst. Please don't do that. If you can afford to not take it, save up some interest, then I think that's the best, and don't need to really take up money just to ball, right? So in conclusion, for this episode, it's going to be a short one. Who should take moratorium? If you are facing financial difficulties in your cash flow, I think you should take it. Yes, there are interest, but I think it's minimal, it's still manageable to survive this period in order to fight tomorrow. I think that should be the concept here. Then if it's for a house that you're living in, you can afford to pay, right? Then I don't think you should take, because your home is an expenses, so indirectly you're increasing expenses. If it's for me, my properties are generally investments where they're rented out to tenants, right? So whether or not the increase in interest or the extension of the loan tenure is almost negligible for me because it's rented out anyway, then it will be a very good fundraising activity. Imagine this 6 months, I don't have to pay installments, but the rental collected remains the same. So it's going to be a capital raising activity for me. 6 months later, I get this amount of cash and I'll look for something else to buy again. Then for those who are in debt issues, for example, your credit card issue, your personal loan issue, because those interest rates like personal loan at 13%, credit card loan at 80%, right? You are taking a loan that is maybe 2% because it's tabulated daily lah. You use a loan with lower interest rate, gao tim, to finish up a loan that is higher in interest rate. I think that would be a very sensible move. But that doesn't mean that because now you're settled already, you can go buy more. Then that's the very wrong concept to think of it. And I think that's about it. Hope this episode helps. But for detailed calculation, I think there are a lot in the market, a lot of experts showing like how would you tabulate a 500,000 loan, how would you tabulate a 300,000 loan, and things like that. So I think that's all for this episode. Thank you very much for watching and see you on the next one. Ciao.